Hey guys, so today we're going to be reviewing the EOS position, which naturally failed because we got stopped out. But I think there's a lot of interesting things to learn here. And I personally had quite a decent amount. I lost about 2% of my portfolio in this trade. I want to go over why I went into this trade, what I could have done differently, and to what extent it was just bad luck. So the reason I got into this trade was a pattern that I had seen here, which played out 3 times, which was this 4-hour bullish divergence on the RSI and the MACD, which led to notable returns. Now, I had a text box here somewhere showing the percentages, but it's okay, I remember them anyway. So we had the first bounce over here, which led to, I think this was about, that's right, 6.8% jump. The second divergence, which led to a much bigger 15%. And the third bounce led to about 9%. And very simply put, lower price, higher RSI, higher MACD, okay? And then we got a move up from there. 3 times in a row, okay? And not only that, but of course we had a nice bullish 4-hour trend here, which got broken. I mean, this, if you just drew a line over here, it would be a pretty solid trend line. But that got broken, so we got into kind of a new stage here. And then, again, the reason I was in the trade here was that I saw this playing out again. Actually, it's not this one, it's this one over here. I'm going to zoom in a bit so that we can actually see what's going on here. Okay, it's a little bit slow because I have the video recording. I don't know why I spend so much money on a Mac when it can't even handle video recording and trading, but there you go. So we saw this instance of a bullish divergence over here. Okay, the price had quite a steep lower low over here, and we had a higher high on the RSI between this point, and also on the MACD. So I set a stop loss of just sort of a little bit below the second green candle here. Sorry, the first green candle, and we got stopped out at 2 point. I said the stop loss at 2.2, but we got stopped out, of course, 2.185 or something, because naturally you don't always get the exact price. And of course, this just goes to show how this is not a science. This is not, hey, we're going to buy this level and it's going to go our way. This is making estimating based on previous trends, the probability is going to go in a certain direction. And then based on that probability, sort of estimating again a solid risk to reward ratio that is required. In this case, the risk to reward ratio was about 2.2 to 1. And the entry price here, let me just see. It's weird, it doesn't say profit and loss quantity, risk reward. God, that's annoying. Anyway, if I double click it, the coordinates will get the entry price of 2.34. I actually got in at a better price. My average price was 2.3, and I think for our trade as well on the high portfolio, it was the same. The stop level will actually put it to what I stopped out at, so 1.188. And the target profit, I think this is about accurate. So what we were targeting was, as I mentioned before, we had a 6.7, 15, and 9% jump with those previous 4-hour divergences. I was hoping for a 10% or so because, well, the reason being that now we're even more extreme, right? I mean, basically, the more extreme we get, in theory at least, the higher the probability, the higher the bounce will be once we do bounce back properly. And so now it gets increasingly more exciting the further we go down, because it increases the size of the jump from when we do finally go up. The hard part, of course, is trying to catch the bottom without losing too much money, right? So what happened here? I mean, basically, I feel pretty comfortable with this trade that I made. It was unfortunate that we got stopped out, but based on this information, which is pretty solid, I would say, pretty solid set of patterns, 4-hour chart. We're not playing some sort of 1-hour chart, and which has lower probability setups. I'm pretty happy with how it went. Now, in terms of where the stop loss was, or in terms of looking at other possible factors, that's where I potentially made a mistake. So, well, I definitely made a mistake, and this is something which I'm going to write down as well now. Before any big trade I make, I want to say, okay, I want to look at a variety of factors, not just RSI, MACD, divergence, but also trend lines, price action at certain levels. For example, here, if we look here, you can see that we had a lot of price action around this 5.2. Then it basically decreased by a significant amount over here. And here we have virtually no price action history. So that's indicating that there is actually a pretty good chance that, after slipping past these two important levels, that we come down to the next important level, which is really 1.37 over here. So that would be quite a big move down. And of course, as a trader, we have to always be aware of, I don't think that we will hit 1.3 before having at least a 10% bounce. And I think that's very reasonable, but I could be wrong. And we have to see if we're wrong, where do we get stopped out? How do we play it? So on the daily here, it's very interesting because we are just coming down hard here. I mean, we're exponentially moving down. And as you know very well, if you've been in the market since December, anything which moves exponentially in one way is bound to bounce back hard. It doesn't mean it's going to change the trend like permanently, but it's going to bounce back hard. Okay, so this is, we had these moves down, like brutal quick move, okay, a bit of consolidation, brutal quick move, consolidation, quick move, and then a little move up. But look at this, for example. This is quite similar to what we're seeing now. This was a pretty much exponential move down as well. So we had brutal move down, tiny bit of consolidation, and then another big move down. And of course, after that, we had a little move up and the equilibrium. So what I'm seeing here now, based on just price action alone, is, okay, we broke this equilibrium, bearish, bit of support, and then we came down, and now we're just consistently going down. I mean, look at this. Oops, I need to zoom out like this. If you look at this trend line over here, just look how steep it is, okay? Gonna get this right. Jesus Christ, it's so slow. And we're gonna zoom out like that. Okay. Have a look at this. So we're in a channel here as well, obviously. But this is not sustainable, like not remotely sustainable. The bears are not expecting to take this down, certainly not below 1.3. I mean, that would be absurd to stay within this channel. Either we're going to break out of this channel, come down bearish hard, and then most likely have a small V-shaped recovery over here, potentially a large V-shaped recovery, or we're going to bounce from here, go up there, and then come down slower. But even here at this point, it's pretty unlikely that we just stay in this channel. It's just coming down too hard, too fast. So what else can we see here? Well, the RSI was looking pretty good up until here. We had a bullish divergence over here between this point and this point. Another bullish divergence over here. The price, of course, is continually going lower, so any higher lows on the RSI implies bullish divergence. This was a notable one. This was kind of like a double bottom. I wouldn't call that proper divergence, but now, of course, we've broken that as well. So we're just hoping that this, it's already created a bullish divergence from this point over here to the first one. Let's see how many bars that is, because the RSI is working on 14 periods, so anything more than that. So we're literally just at the 13 periods there. So we do actually have this bullish divergence here, and that's pretty solid, obviously, this line over here. But we're getting closer. We could double bottom. We could even just go below, and then it's going to be hard for the bulls to have a case. In any case, the other thing, the trend line, which I should have been watching when making this trade, was this one. So the purple line over here at the bottom indicates the close of the candles. Now I drew this, I think it was yesterday. So we have a new close over there. We're going to modify this slightly. It's actually gotten even steeper now. So again, for a reversal trader like myself, well, I certainly mostly enjoy reversal trading as opposed to momentum trading. This is better news because the harder it goes down, the harder it's going to come back up. In any case, the extremes here is a more sort of solid trend line in the sense that it hasn't really changed. So we have almost one touch, 2, 3, 4, 5, 6, and this was where I should have assumed that, or I should have accounted for the fact that we could very likely have broken this support of 2.2 where I stopped out over here, and come down to test this more extreme level on the yellow line, which is exactly what we did. And if I'd have bought over there, or at least if I'd have dollar costed average into the position, then I would have had progressively larger amounts being bought coming down, and then I would have, at the very least, I would have broken even when we came back up here, if not even made some profit. So I think that the mistake, well, also personally, I probably risked a little bit too much of my portfolio for this trade than I was comfortable with, tiny bit more. I was planning to risk about 1.5%, and then I kind of got a little bit overexcited and bought. But I'll tell you another reason why I actually why I was very bullish on this trade. Oh, it's on the 4 hour as well, actually. So look at this. Looking at the price action here, I was looking to get in after this bullish divergence, which was between here and here. And lo and behold, we had a bullish engulfing candle with more volume than the previous 3 candles. Okay, so for a reversal trader, this is kind of what you're looking for. Bullish divergence, price action telling you that it's going in the direction you want it to go in, and volume, right? So I was just laddering into this red bar over here, and really, even in hindsight, it looks like a good, solid trade. Okay, so I really don't think it was that bad, and I can even show you if we go to the 15 minutes. It's good to have a variety of tools in your arsenal. And I saw a 5-wave structure going up. Let's see if we can find this now. That's weird. When was it? We're the 5th of December, 6th of December. Actually, the problem is these charts always have different time. Here it says 6th of December, 12 noon. Oh, wow, that is correct. How odd. Okay. So it was the 5th of December, and it was about the same time, actually. Yeah, so it must have been here. But you know why we can't see these waves is because we are in too big a time frame. So I saw it on the 5-minute time frame. Here we go. So we had a very clean 5-wave structure over here. 1, 2, 3, 4, 5. Now, I'm not an Elliott wave specialist, but I know the basics. And if I see a structure which looks like a very clear 5 waves, then I will make note of it. And I will sometimes, as I say, I had a number of other reasons to get into this trade. But I saw this 5-wave structure. It looked pretty solid. And then I made a fib retracement here to get in. And I got in. Arguably I got in too prematurely because I started entering at the 0.5 level, but only in small amounts. I had most of my trade was around this level, the 2.3 mark, and then I actually added at 776 as well. And again, initially I was going to stop out if we had a failed wave over here, but then I saw that in the past, even with a 4-hour bullish divergence, after the green candle following the red one, we still came down an extra % before moving back up. So I said, okay, I'll allow for it to come down 1%. That's what I did. And then, it looks pretty lame, but I got stopped out really like over here. So, this is the life of a trader. You make spend a lot of time making a decision, and then, you basically get stopped out at almost the worst time possible. So that was pretty unfortunate, especially since I came back up and would have been able to sell break even at least. Still, now, are we seeing any notable Elliott wave structure? For me, I'm sure if you're a specialist, if you're a pro, you can find some waves over here. But I'm really interested if it's a very clear 5-wave structure. Okay, so I'm sure you can maybe say it's some kind of 5th wave diagonal or whatever stuff Silicon makes up. No, I'm just kidding. It's all good. But I only think it makes sense to use the Elliott wave and to spend so much time on it because it's very complex, It's so many rules, and I think that it's kind of a waste of time unless you have a very clear structure. So what are we seeing now? I mean, on the 5-minute, I don't really want to look at the 5-minute. It's a bit too small a time frame. The hourly, I mean, I right now have some pretty massive buys, pretty much the same size position as I had before, buying at 2.3, but I'll have them over here if we get to the $2 level, and I even have some at like 1.8 because I really want to be able to buy progressively larger amounts as we go down. In case I'm wrong and we don't hold support here, then I may stop limit out some of that long position, but I prefer to just enter a relatively smaller position here and then just have like 50% larger position at a much more extreme level, because there's a very good chance that it comes back up hard. And there's also a small chance that we just kind of break through this line and then just come right back up. So anyway, another reason why actually I entered this trade bullish was that Bitcoin was over here testing this trend line. And I figured, okay, well, I'm waiting for a bullish reaction. If Bitcoin goes up from here, we could very easily have like a 6-7% bounce. And of course, what would that translate into EOS? Probably like 15-20% bounce, right? So I saw the potential for that. And another reason I felt comfortable exiting was when we broke this trend line, okay? But it seems like kind of a fake out here. And this is a fairly notable trend line. It's 1, 2, 3, 4 touches, okay? We've broken it. And now what I'm looking for is potentially for holding support here and then going up. But I'm not holding my breath for that. It's definitely looking pretty bearish. So yeah, that's pretty much it. Oh, of course, this is another notable line to be watching, is this 4-hour upward sloping RSI over here, okay? So if that were to break, then it's going to be looking pretty bearish. And to be honest, if that breaks, then we almost certainly will break this support line as well. So if I were looking to buy it for a trend reversal here, this is a potential entry because, you can say, well, if we break this support, we go back up. But considering that we've already broken this support and that there isn't significant volume pushing us back up from the support yet, I think that's kind of a long shot. And even buying here would be, let's say it breaks and it comes down to this horizontal support. Then of course, this RSI would be next to this, on this line again. And that would be a potential better entry. But even that, I'm going to be a bit cautious for that. But I think on EOS, we have the same. Yeah, so no, in EOS, it's not quite the same. That's the interesting thing. You have this very nice clean line going up over here, but then we broke that trend line. We're over here. So now it creates, if we just remove, just before I remove all the drawing tools, I'll show you what these horizontal lines. So these are, of course, lines of resistance. I think it was on the daily. Probably not that relevant right now. So we're going to remove all drawing tools. So if we look over here, we saw, as I say, this nice move going up, and potentially this would have been, continuation. But now instead we've come down to this more bearish looking line over here. Nonetheless, it's still a potential line to be looking out for. Certainly not something you want to trade just on this alone, like just touching this RSI. But if there's confluence with for example, with the trend line, the large trend line that I showed you over here, if we happen to touch here, and then the RSI touches there, and then Bitcoin touches this horizontal line, there's certainly some argument for getting into a trade there. And then yeah, so that's kind of what I'm looking at right now, and I'm really excited for Bitcoin to potentially hit 3,000. I think that will be a monumental trade if we do get to there. But until then, that's it for me. All right, see you later, guys.